Good weekend, everybody. Thank you for being part of freetradingvideos.com. This is the weekend edition. Here it is. This is the S&P Daily. We're going to be moving fast here, gang. Nice uptrend. I talked about Friday's video that we might have closed higher than a major trend line. Right here, look at this hammer. We closed at the top here. This could be bullish to the upside either Monday or Tuesday. But let's not forget the ominous bearish divergence on the MACD. So that is still staring us in the face. As we always do, here is the weekly. Nice falling wedge formation. We break out, we run up, we break over the 20-week moving average. That's the blue line right here. And we continue up. Now let's count these. 1, 2, 3, 4, 5, 6, 7, 8, 9, and a base. Let's not count the base. 10, 11. 11 weeks going north. That is one big monstrous up leg. The last time we've seen such a monstrous up leg, that many candlesticks in a row, was back here in 2006 in a big bull market. Look at us going up, down. Bit double top and for murder. We come down, we crash, we pinch, we're up. Now this is, why do I bring this up? Because it's an extended leg. Very extended, a V bottom type formation. Look at this 50-week moving average flying down from the north that should act as nice resistance. That's what we're looking at. And let's pull in the monthly. Now the monthly we're going to spend a little bit of time on. I want you to understand what we're going to be showing here. Here's the monthly. We come crashing down, a big multi-leg down. You know, in a downtrend, your down legs tend to be 5 to 6 bars in length. We come down, up, down, up. Let's just count this leg coming down. 1, 2, 3, 4, 5, 6 leg bars coming down in this trend, or this down leg in the trend that we're in. So in a down leg, you get 5 to 6 bars coming down. We have six here, and the up legs are shorter in size. They're usually 3 to 4. We have 1, 2, 3, and 4. So this is a beautiful bear pullback, or a pullback sell, or some people call these a bear rally. But any way you look at this, this is a bearish setup. It is a juicy, yummy looking bearish setup. Now, let's zoom in closer. This line coming down is my 11 EMA, exponential moving average. What that means is if you are aggressively trending either up or down, the 10 or 11 or 12 or the 13 EMA tends to be the level that you bounce off of. You can see when we went into the aggressive downtrend, we broke through the 11 EMA, the pink one. We come down, we came up and found resistance perfectly at the 11 EMA. That told us we were going into an aggressive downtrend. Now watch this. 11 EMA comes down. We don't even touch it this time. We came near the pink line, but we didn't touch it. That means we're that much more aggressive to the downside. And look what happened. A major sell-off. See us starting to roll over. We kind of roll a little bit, and then we pop up. The direction that we're heading here, I'm not convinced that we're going to touch that 11 EMA. If we do not touch that, that'll be a very aggressive to the downside. Typically speaking, a typical bear pullback would make it to the 20-day moving average, this blue one right there. I do not see us getting up that high. And let me tell you why I see this. It's not an opinion. It's what I'm seeing in the technicals. I'm going to blow this up. Now what I'm going to do is draw trend lines, but I'm going to draw them on individual candlesticks. So these individual candlesticks are the things I want you to pay special attention to. Now watch this. I'm going to draw a line. I'm going to go from right here. Let's go from high to high. High to this high right there. Okay? So this is starting to show us just our ascent, heading up. So we set this path. What did not happen on this candlestick? We did not touch this. If we didn't touch this, what happened? We had a slowing of momentum. We're not hitting this. Now, so I'm going to draw another trend line there to this, that high to that candlestick. Great. So we went from this pitch to this pitch. So we had a slowing of momentum to the upside. All right. Uh-oh, what didn't happen here? We didn't hit it. So let's go from here to there. Now, check out these lines. Pretty uniform, aren't they? What can we tell that's happening here? What's happening? It's just a slowing. It's a rolling over. It's losing its strength. The up leg is losing its strength. That's what we're seeing right here. The other thing that I love in bear pullbacks or bull pullbacks, it doesn't matter, is when the candlesticks condense in size. Look at this. What's happening to these candlesticks? They're getting smaller in size. When the trading range condenses, that's also a pattern of slowing. And that's what we have, a moment of indecision taking place and a reversal that could be imminent. So what do we have on the bear side? We're in a downtrend. We have lower swing highs, lower swing lows. We're in a defined downtrend. What else tells us we're bearish? We're below the 50 and the 20-month moving average. What else tells us we're bearish? We have a big down leg, and now we have our up leg. And that's a great setup for a bearish formation heading down right here. What else tells us we're bearish? We're not at the 11 or any EMA. We're not even close to the 20, and we're already showing slowing. So what else is bearish? Is the rise, the up leg, is slowing in nature. What else is bearish? Candlesticks, when on the up days, are condensing in size. So all the people out there want to say, well, we're bullish, we're bullish, we're bullish. We could definitely continue bullish on the daily. On the daily. The weekly is overextended. It's called being overbought. So we are begging, we are due for a pullback. Just statistically speaking, it's not anybody's opinion. On the monthly, which rules them all, I just lined up a bunch of bearish, technically bearish arguments on why we need to be very careful going long this summer. While we're here, let's also take a look at, let's look at the spiders. I'm going to pull the spiders up, pull in some volume. Let me give you something else that's happening bearish. You want to see big volume in a bear market on the down legs. Look at this big volume. And you want to see dissipating volume on the up leg. See this? Dissipating volume. Perfect setup for it's perfectly set up for bearish activity. So, if you are not taking advantage of the chat room and the forums at freetradingvideos.com, they're free to you. If you're not taking advantage of those, you are missing out. Get plugged in and know what's happening. You have people, I mean, we had 80 plus people Friday in our chat room just hanging out at any one time. Probably 200 to 300 made their way in and out of the chat room throughout the day. So we look forward to seeing everybody. Thank you for being part of freetradingvideos.com, and always when you're trading, use a stop loss. Till next time, we'll catch you there at freetradingvideos.com.